get the idea. It is the daily financial news. This is a news show that we do 7 days a week, 365 days a year. And if you'd like, there is a playlist below that has over 1,000 days. You can go back and see what we were talking about on October 1st or July 22nd. Whatever you'd like to do, see what's going on. Again, we try to do these in 12 to 14 minutes, talk about the day. We focus on the consumer, cost of capital, and what is going on in real estate. That is our bias, that is our focus. As we get started, number one, if you are one of my students, you have great news or good news this morning. We rolled out our first bonus section content this morning, actually yesterday, around Section 8. If you know anything about what I'm trying to do with how to get started one rental at a time, I'm trying to get more content creators to bring you and the entire world value. So Urban Teach is her handle on Instagram. Rosalind is her name. She went ahead and created some intro to Section 8, and that material is already loaded. I'm hopefully going to be talking to her on Thursday to kind of introduce for you today. But all the bonus content comes for free. It is there. It is uploaded. It is ready to go. Go ahead and take a look. In addition to that, we have 9 people to congratulate. Let's run through that list together. And each one of these people have bought a deal in a very competitive market. They've done the work. Ryan actually posted a picture of his house telling you about how doing the work. The property, as I recall, was listed in November for a crazy price. It had a price drop, and he ended up buying it about 20% below initial list price. Folks, that is a housing slowdown. When we see days on market expand, we are going to see some people take the properties off, and then others will need to sell. And when you find that motivated seller, you will make a good or great deal. So Ryan, thank you for that. Congratulations. Next up, we have Jordan. Again, Jordan, congratulations. Elizabeth, congratulations. Jordan, one more. Adam and Lindsay, congratulations. Heather, congratulations. Michael, congratulations. Michael, congratulations. And one more. This one warmed my heart. This is a family of 4, mom, dad, and 2 kids. Wanted to make sure we get the kids a shout out. I believe they were like 7 and 9, I think. So shout out to the family. Sumi, Jarrett, Sunji, and Slade. Make sure we get all 4 of those names out there. Congratulations for doing the work. And then most importantly, folks, we are getting dangerously close to our goal. That is a 4, 9, and a 6. If you can't make that out, it's 496. We are 4 away from 500. Couple of things. My hope is we hit 500 maybe this weekend, maybe next week. First, we are going to continue to count. 500 is our first goal. We have a goal of doing 1 million. So 500 isn't even 1% of our way there. So yes, I will keep tracking. Yes, we will need to do these. Yes, keep taking selfies. Yes, keep doing the work, but also share what is going on. Second, I am going to, yes, I will dye my hair. Yes, we will collect some money for a food bank, but I'm going to try to write a letter that kind of encapsulates what we've done together over the last 9 to 10 months. So that is something I want to work on this weekend and share with you, and basically just kind of look back. As you've read my first book, it's something I'm not good at, kind of looking back and appreciating where we are so that we can keep going forward. So again, 496, folks. We are less than 1% away from what I thought was a crazy goal of 500. And it looks like, knock on wood, we're going to do it in just under 10 months. Man, it's amazing, amazing, amazing. And again, Rosalind, thank you for the bonus content for Section 8. If you have the course, it's free. It's there, ready to rock and roll. Where are we going to go first? I'll just go top down. So first, we got some earnings that came out. Gap came out, which was an interesting report because their numbers were not great. Declining sales, holiday below expectation, all kind of negative information. But then they said, we expect next quarter to be better. Basically, we bought early. We understand there are supply chain issues. So again, they bought early. So they're singing a song of a better quarter. I am not sure that is a good, I think that's bad timing. I think retail, American Eagle, Abercrombie and Fitch, Urban Outfitters, Victoria's Secret are all telling you that the consumer is getting stretched. So Gap, you might be setting yourself up, but we shall see. Costco came out, did beat top and bottom. There are now calls that the Russian economy might shrink 35%. I suspect that there is a very good chance that Russia suffers something very similar to what we had in the Great Depression. Their standard of living, the citizens of Russia, the standard of living is not going to be good. In addition to that, remember, I studied the consumer. I traveled the world. We are all the same. We just speak different languages. Russian citizens right now are scared. So what are they doing? They're doing what you and I would do if this happened to the American dollar, the Canadian dollar, the Japanese yen. If we had ruble in this case, we would try to get rid of it. There are people running out to jewelry stores and high-end stores trying to buy assets that they think will hold up better, that they could sell later. They are trying to get out of the currency. The rich, not like oligarch rich. We're talking just the well-off. They are trying to liquidate assets because they are trying to raise capital. They want to create a buffer. The consumer is the same around the world. And what is happening in Russia, in some regard, happened in China. Remember when we talked about Evergrande 3, 4, 5 months ago? Real estate for 40 years was the way you got rich in China. It was their version of 401ks or pensions. They don't have those things. They used real estate as a retirement account. Well, that didn't work out well. Now they're scared. They're conserving capital. They're not buying Starbucks or Nikes or other things. The consumer is scared in two very large countries. This will have global impact, and we'll need to pay attention. I've done a lot of research around Arthur Burns. We've talked about him probably 9 months ago. If you don't know who he is the Fed president that is often credited with great inflation. In short, he did not think inflation in the 70s was caused by the Fed. He did not believe that the Fed printing money caused inflation. He thought, for example, that the oil embargo that happened in 1973 was an economic shock and not something the Fed should be concerned with. So it lowered rates. On top of that, there were some weather events. I think it was Argentina or somewhere that destroyed crops. Arthur Burns again said that this is not a monetary problem. Ignore it. Food prices shot up. He did not realize that the economy is one complete unit, and thus he kept rates low and actually lowered rates. Folks, Powell is repeating the same mistakes. He doesn't want to admit it. He certainly has reviewed Arthur Burns. He is keeping rates too low, too long. Rates are negative. The United States has and has had negative rates. Do you want to know why assets are up, risk assets are on? You want to know about meme stocks and all these other things? The Fed did that. The Fed needs to take ownership, and right now they aren't. So the Fed finally relents in the mid-70s, but it is too late. Inflation is entrenched, and we have a horrible decade that doesn't rest until Paul Volcker takes interest rates above inflation. Think about that. The Fed funds rate above inflation. I can't even imagine the pain that would cause. Again, in the real estate market, we need to talk about this. I'm convinced we do not have a supply problem because, again, the total transactions are the same, if not higher. We have a demand problem. Rates need to go up and things like that. We are going to see days on market. And that is good for us. If you are a one rental at a time fan, we want days on market to expand. We want inventory to slowly build. Why? Because we want to find the motivated seller, the one that allow us to create a good or great deal. There's more and more people think the Fed is only going to do a quarter point on the 16th of March. In fact, Powell said yesterday, the day before, he supports that. I'm going to stick with my 50 basis call, although it doesn't feel good. I've been calling for it for 6 months, so why change? My only thought is Powell's actually planning to shock the market. This is my only hope. This is my only hope to be right. Powell is playing poker. He's going to set Wall Street up, and he knows he needs to hurt them. He knows he needs to hurt risk assets. So what is he going to do? He's going to tell you a quarter point is a lock, and then bingo, bango, surprise data comes out, and he does a half. I don't think that's likely, but it is certainly my hope. Because right now, Powell is Arthur Burns 2.0. It is not good. Jeremy Siegel is out screaming from the hills that the Fed needs to do 50 basis points. He says the Fed is late, behind, and they're going to keep blowing up on the bubble. Folks, if you're not following John Burns on Twitter, no relation to Arthur Burns, that's funny. I just caught that. I didn't even see that last night when I did these notes. John Burns on Twitter, you should. Most undersupplied markets. Think about that as a real estate investor. Undersupplied markets based on current vacancy rates compared to historical trend over the last 32 years. John Burns, again, John Burns Twitter. The cities are, in no particular order, Salt Lake, Raleigh, Charlotte, Sacramento, Indianapolis, Las Vegas, go figure, Riverside, California, Phoenix, and Tampa. Have we not heard from Ivyzellman about construction being behind and all of these things? And, oh my God, the world's going to blow up because we're building too much. Folks, we have decided to live in different places, and the builders weren't ready. Again, the cities are Salt Lake, Raleigh, Charlotte, Sacramento, Indianapolis, Las Vegas, Riverside, Phoenix, and Tampa. All those markets I've heard from other investors are on fire, and vacancy rates are all-time lows. Rents are racing higher, and building can't keep up. Building takes years. It takes a moment to decide to move. Jobs came out. That was the big number. Lots of us, actually, I think all of us were wrong. I think most of us took the under. I think the under was 440, or 440 was the number. Most of us took the under, or maybe it was 500, and we took the under. Jobs came in strong. 678,000 jobs created. In addition to that, we revised January and December up. So the job market is hot. We went from a 4% unemployment, or U3, to 3.8. Again, that will help the misery index that we've talked about. Looks like leisure and hospitality had the biggest growth at 179,000. Labor force participation, which is a key metric, went up. It's now 62.3, still a little shy of 2019, which was 64.4, but getting closer. The big number for next week, folks, is going to be CPI. CPI, remember, was 7.5. Looks like there's a lot of people calling for 7.8. So let's play over under together right now. CPI next week, 7.8. Are you going to take the over or the under? I'm going over. I'm going to go 8 just because I want the Fed. The only hope I have for the Fed raising rates 50 basis points is CPI comes in hot, hot, hot. That's my only hope. And I think he needs to do that. So, folks, again, remember, like, subscribe, share the channel. We are helping change lives. We are going to continue to count. We are going to get this baby up to 1 million. But I need your help. Also, if you'd like to add bonus content to my course, leave some comments below around what you would like to see. And please, if you have another expert that I should engage, do that. Let me know. And yes, we will do a live Q&A tomorrow. I think I've caught up on all my tax information, so we will do our live Q&A at 8 a.m. Pacific. Thank you for asking. Folks, everyone have a wonderful, wonderful day. Take care of yourself. It is Friday, right? I hope it is. Yeah, I think it's Friday. It is Friday. Take care of yourself. Have a wonderful day. Bye.